Okay, so if you think about banks' attitudes that led to the Royal Commission, it was also about the assessment of the way in which you deal with people who are going through hardship and businesses as well. So in your outlook statement, you effectively say that you're monitoring right now, in particular small and medium-sized businesses, for the impact of the falling discretionary spending from consumers. Why have you targeted that area in particular? Do you see problems?
We do anticipate that as the cash rate and the full effect of the cash rate increases are felt by households, they will pull back on their expenditure, particularly in some discretionary areas. Clearly, that will show up in different parts of our business customer base. But we've also seen difficulties over the course of the year in construction, particularly in housing construction. We think we're through the worst of that. We've been able to support a number of our customers through that. And you're quite right, Ross, a number of things have really changed in terms of the way we work with our customers. We're here to support them and work with them in both the good times and the more challenging times. And understanding that and facing into that together is the most effective way to do that.
Okay, I get that, because that's the way you deal with people as they might be going through stress. But there's always the reality that there are going to be some businesses that will not survive. And indeed, you've got to make that assessment sometimes as a bank. How do you do that without gaining a reputation that did lead to the Royal Commission? Because you've got to go through that part of the cycle. How do you manage that?
Yeah, look, it's really important. And as you said, each one of those decisions, when you're on the other side of that, either at a personal or at a business level, that's some of the most stressful times of anyone's lives. We also have to be realistic. At times, as you said, you can't get every business through that set of circumstances. We've certainly been able to demonstrate that we've got the vast majority through, and we've all been the beneficiaries of strong economic growth and low unemployment for a long time in Australia. And of course, we'll be hoping that that does continue. We still remain optimistic overall. We think we'll be able to help the vast majority of our customers through, but at times, yes, that's the nature of banking. Hard decisions do need to be made, but they can be done in a way that can be certainly empathetic and understanding. The bank's policies have changed quite a bit to some of those that were highlighted as part of the Royal Commission. Things like non-monetary defaults, they don't exist in small and mid-sized businesses. So people actually have to be unable to make their repayments before a financial institution.
But there's a point at which a bank has to make a hard decision.
You do, absolutely. We have to make hard decisions every day. Unfortunately, the number of hard decisions in the totality of the economy is small at the moment. But at any time when the economic cycle turns, it's more challenging, unemployment goes up, or even asset prices are coming down, businesses aren't performing. The reality is that we have to make those hard decisions. We'll do that as empathetically as we possibly can, but absolutely I don't shy away from the fact that, unfortunately, there probably will be more of those sorts of decisions in the year ahead. S&P Global Ratings today says Australia is likely to have a soft landing of its economy. Is that your own assessment? Because, of course, that creates something of a buffer, maybe for some of these businesses that otherwise might go through significant stress. It definitely is our central scenario, and I think we're growing in confidence insofar as where inflation's coming down. Not that there aren't risks that inflation will be more persistent than we expect. Obviously, the labour market, as we've discussed, has been more resilient than we probably had otherwise anticipated. So we do believe that whilst we're going to move into lower growth over the course of the next calendar year, a contraction can be avoided. The worst effects that were probably feared 12 months ago or so, hopefully we're going to be able to avoid. And given where we are now, we think we're at the top, very close to the top of the rate hiking cycle. The vast majority of our customers are able to withstand that, albeit they're feeling some signs of stress. That gives us confidence that we'll certainly be able to navigate through the next year or two.
And so the bank itself, how do you manage the right size of the staff that you need to get through this economic cycle as well? Is it a case where the bank is growing staff and growing its capital investment at the moment, or are you also starting to try and preserve a bit of that to be able to hang on in case times get a bit tougher?
Yeah, a couple of different ways. So certainly in some areas we're absolutely expanding. We talked today about we're investing $750 million in the last 12 months in cyber, financial crime, preventing scams. That's an area we're absolutely adding people, and we expect to continue to do so. We want to be prepared to invest in our business, but like any business, we also have to be conscious of the broader environment that we're operating in, which means there are at times changes to our staffing levels in some parts of the organisation. It will depend on more broadly on economic growth. In terms of how do we position the bank, we position it for very significant financial strength. We have strong capital requirements, which we have to hold for unexpected losses. We're well in excess of the regulatory minimums, about $9 billion more. We also hold about $2.2 billion more in terms of loan losses that we expect to occur. So a big surplus there. We want to make sure that we've got an enormous amount of financial capacity to support our customers, invest in our communities and support the broader economy.
Okay, so take me to one other aspect of banking right now, and that is the ACCC's rejection of the ANZ's proposal to take over Suncorp Bank. Were you surprised with that decision that they weren't allowed to go ahead?
Look, I have to say we didn't make a submission. We're not following it too closely. There's plenty of other things for us to worry about. But obviously I've been following the decision. It would seem it was probably evenly weighted. Clearly, both ANZ and Suncorp thought it would be successful, and they've made it clear that they're going to appeal that. So,
well, the Commonwealth Bank was allowed to take over Bankwest. Westpac was allowed to take over St George. This one then is rejected on competition grounds, which again seemed a little curious given the fact that you've now got two big banks and two smaller banks in the NAB and ANZ. I thought it would have almost re-weighted the banking sector to a certain extent.
Well, I mean, the context has evolved as well, and as you would recall, when we acquired Bankwest, it was at the height of the GFC. Its global parent was failing and needed to be recapitalised. There weren't many other buyers that had the financial capacity to be able to step in and take over that bank as well as take on all of the liabilities. And so that's obviously a very atypical time when it's harder, I think, for a major financial institution to acquire another bank. And so they've got to balance both the competition grounds and I suspect, broader stakeholder expectations.
So, Matt Comyn, this week a lot of attention has been paid not only on the profit of the bank, but also on your personal income. Hurdles have been met, and as a result, performance bonuses have been vested to you. Now, it's a big number, there's no doubt about that, more than $10 million. How do you personally sort of, shall I say, rationalise that to yourself? You signed on to the deal, that was a deal, you've got it. How do you sort of weigh it up yourself?
Well, we're paid on very clear performance targets that relate to improving the customer experience, growing the business, and also delivering consistent shareholder returns. And so my remuneration is a consequence of those performance metrics. The reality is, Ross, today, tomorrow, my team and I are very focused on how do we make sure we're doing a great job for our customers? How do we set the bank up for the future? In my experience, other things tend to take care of themselves if you do those two things well.
But you still recognise it's a big number.
Of course I do.
In the community standards, and you always look for the community and look out to the community, you serve the community, but you still recognise from the community standards it is a big number.
Yes, I recognise that, and equally I'd say the way I and other members of my leadership team are remunerated are based on very clear performance metrics that are set over multiple years. In this case, those performance metrics were exceeded, and the remuneration that is paid is a consequence of that.
Matt Comyn, always good to chat to you. Many thanks for your time.
Great to be with you, Ross.